Let's take a look at some charts on Sushiswap for Brave New Coin. So Sushiswap is a Uniswap clone. They've attempted with an anonymous team to become a large competitor against Uniswap. In crypto, there are generally no new ideas. Very much like evolution, we get one new adaptation, and then there's several other iterations of it that compete against each other. Some live, some die. And we're seeing it play out in real time here with Sushiswap with various sort of vampire attacks against Uniswap in an attempt to steal liquidity away from them. So as with Uniswap, there are typical AMM models 50-50 with impermanent loss considerations, stable fees considerations, the whole 9 yards. Sushi is a governance token, which, as far as I can tell, we don't really know what that governance is going to be. If you go to governance, there have been a few governance related things that have come up, but I don't think any voting has come up. I might be wrong on that. You'd have to look into this further. If you truly care about these tokens and are deep in the bubble that is DeFi, then you'll want to know about the head dev, leaving with all the money in the beginning and then coming back with all of it when he received death threats and assassination threats, stuff like that. That's important to know if you really want to get involved in this stuff. For me, as a speculator, I care a little less about that than most people maybe will, or maybe I even should care about it. If we look at the top liquidity pairs, just like Uni, it is mainly stuff you'd expect to see. Some stablecoin stuff, ETH versus USD, Link versus ETH, BTC versus ETH. Here are the fees here on the side. Like I mentioned with Uni, these fees, these yields don't look impressive when you compare to other liquidity mining models, but compared to legacy yields, which are less than 2%, right? You're not beating inflation if you're saving USD. I mean, we saw the world get turned upside down when a 10-year treasury was reaching for 2% yields this past week. So just to give you some perspective on how large these yields even are in regards to the real world, so to speak. And if you don't want impermanent loss, then you're focusing on pairs that are stable. So ETH, synthetic ETH, or ST ETH, I don't even know what that is, but that sort of thing where the two in the pair are meant to hold close value. Typically, things like stablecoins hold the lowest impermanent loss. You can see here they also have liquidity mining on a bunch of stuff, it looks like, or whatever they call it. You get a sushi reward as well. So it's all the same stuff. Everybody has the same stuff, trying to get money on the platform, trying to get money to stay on the platform. If we look at volumes over the past 24 hours, it's mostly been Uniswap and Sushi, with Curve and 1inch, and Bancor farther behind the pack. Curve is mainly stablecoins, so the lowest impermanent loss risk in general, as far as those pairs are concerned. But it's definitely something you need to game theory out if you're deeply involved. Let's say hundreds of thousands of dollars worth of swaps on these platforms. You need to game theory out which one has the best fees, which one has the least likelihood for a negative impermanent loss effect. How can I regain that impermanent loss? Should I switch between all of these pools? This is stuff people spend their entire day on nonstop thinking about this sort of thing. So there's definitely a game to be played there. If we look at the daily DEX volumes, again, you can see Uni dominating, but also Sushi in the blue down here, not far behind. In general, Sushi has been half the Uniswap volume, and all of these volumes sort of spike together. There hasn't been one leader for any reason other than the whole sector being super strong as of late. If we look at the TVL on DeBank, you can see Sushiswap here at number 7, 3.6 billion above Synthetics. If Aave version 1 and 2 were migrated, it would be below Aave, it's above Bancor. So there's more stats you could run here on TVL versus token price, market cap. There's all sorts of gamification you can look at there, compare it to everything else, and say to yourself, okay, is Bancor undervalued based on this metric that I think is reliable for price? Which certainly people do. for me personally, I'd rather just rely on the technicals in and of themselves than tease that apart any further. If you look at the sushi transaction count and average transaction values, you can see where the initial airdrops for sushi occurred in 2020. Those transaction counts went way down. And if we zoom in a little bit, go on a weekly average here, average transaction values continue to increase as a function of token price and ETH fees increasing. Transaction counts are also increasing modestly, but definitely increasing over time, especially over the past 3 months, since January when everything has really taken off. Sushi transactions, relatively small in the grand scheme of things, but as long as it's not zero and not decreasing, it's hard to be mega bear on that sort of thing. Active addresses in the fill here with NVT in the line, and you can see the initial airdrop there. If we zoom in on the 7-day average, the weekly average, this is exactly what I want to see on anything. The numbers, you want active addresses to be in the hundreds of thousands or higher, right? Just higher is always better. But if you're bullish on anything, you want to see active addresses continuing to increase. You want to see NVT decreasing. So if NVT is increasing, this says that the market cap is too high based on on-chain activity, even though on-chain activity looks pretty robust by itself. Basically, NVT is sort of saying its prices are going up too quickly. So this could be an inflation effect for sushi tokenomics. That's another thing you need to look into if you are highly invested in this stuff. Look into the tokenomics of everything. Curve, tokenomic, or curve, uni, sushi, 1inch, right? You want to look at all that stuff and see what the release mechanism is. But I like active addresses increasing here versus uni, for example, or decreasing. Even though uni has more active addresses, I always want to see an uptrend there in active addresses. If we look at Sushiswap on the 6-hour, 5200 EMA, monthly pivots, VPVR, volume, RSI, we had a cross all the way back in November on the 6-hour. Not a lot of trading history for this pair, so you have to zoom in a little far and use something that makes sense. But the 6-hour to me is high enough that makes sense. Got a cross all the way back here, and it hasn't crossed yet. So for me, if I'm looking to get into the exchange tokens, the governance tokens, the security tokens, effectively is what they are. What's your belief in sushi as a platform? What is their performance going to be over time relative to everything else? Do you believe they're going to migrate to Sushi version 3 when Uni migrates to version 3? Stuff like that. All things to take into consideration. But overall, trend looks okay. Not a lot of volume support until sub 3, basically. So for me, if I'm looking to get into this in a dollar cost averaging sort of way, I want to see some pain here eventually. I want to see some capitulation. We're already seeing shades of bearish divergence. We're getting highs on less and less volume, just less momentum, less exuberance. The general trend in volume here is declining slowly over time, just drip, drip, drip down. So there's not a lot of exuberance to buy prices up here, which I think is fine. At this point, I think most people are just looking to buy dips on this sort of stuff than sit in highs up here that have been super choppy relative. We're talking a month time here, which in the grand scheme of things is nothing, but in DeFi land, that's everything. December to January to February, February to March have been insane for DeFi as far as bullish price action. So trend still looks fine. Still like it. Claude still likes it on the 6-hour as well. You can see it's been tested over and over and over and over again ever since the initial breakout. So this is the golden breakout opportunity that you always want to catch on any chart, because it's the opposite of what this looks like, right? We've just bounced on the cloud over and over and over. When on the underside, you bounce underneath. Eventually you break out. That's where you want to get long, all the way down here. So for me, I want to recreate this setup in the future. I'd much rather let this, go below 10, go below 5. I don't care. It doesn't matter to me. What matters to me is the setup. I want the setup to look like this again in order for me to get excited about it. And it will happen eventually. It always does. Something always happens where there's a bear market. It's prolonged. It's multi-month. There's some crisis somewhere, right? it'll happen. So for me personally, I'm just being super patient, even though technicals are favorable here. If we look at Sushi BTC, this is more of a picture where I'd want to buy. It's below the cloud. It's re-tapping the 200 period moving average. You can see how it's reacted at the 200 since mid-November. It's been rather strong at the 200 since mid-November. So, if you want to DCA into this stuff, dollar cost average, buy a little over time. Not investment advice, but I'd be looking at anything below the 200 down to the previous local high, basically, of 1400 sats. And you can always set horizontal alerts for stuff like this and just buy it non-discriminately or whatever you want to do. But that's how I would treat that trade setup. The same thing with Sushi ETH. You can see how it's held above the 200 in the cloud since mid-November. I want to see it show some pain here below the 200, at the 200, below the cloud, that sort of thing. It's been rather noisy, but if it can get back above the cloud, above the 200 again, I like the upside here, the upside potential. I think the ETH pairs are more sensitive to DeFi sector rotations than the BTC pairs. So if ETH is strong, then DeFi should be extra strong. That's how I read it anyway. If ETH fees are low, DeFi should be extra robust and strong, and volume should be high, that sort of thing. And if that's the case, I suspect people are rotating into Sushi or any other exchange token for that matter. And if you want to lastly just really analyze this stuff, we can look at the token price, the Sushi Uni pair. It's probably more appropriate to look at the market cap comparison between the two. But if we look at this is reminiscent of coffee and distribution. So this would be a bearish event. This is since December, it's failed to make a new higher high, basically. If you just Google coffee and distribution, you'll see what I mean. And if this makes a lower low, the expectation here is it begins markdown. So the opposite of mark up, where it just continues to have bearish rally after bearish rally, meaning that Uni should continue to see gains over Sushi. I don't know if that's what's actually going to happen, if this pair is even worth trading in that way, in that manner, but I'm sure people are looking at it and they're comparing, BNB to FTT, they're comparing Curve to Balancer, they're, all these odd pairs, right? Because if you're presented with all these options, how else are you going to do it? You can look at tokenomics and the team and the faith in the future of these projects, but you should also be looking at stuff like this. Look at the market caps, look at the TVL, the market caps, look at the token price, how has that behaved over the past few months. And the other thing here is on trend, it's definitely looking bearish since mid-February. So overall, I don't think Sushi, Uni, Curve, 1-inch, Balancer, I don't think any of this stuff's going anywhere anytime soon. Sushi is number 2 as far as volume is concerned relative to Uni, despite being a Uni clone. It has some nuances, some differences that are worth investigating further if you are looking to be ultra informed on the DeFi stuff. The tokenomics look fine, or the on-chain metrics rather look fine for the token in a bullish manner. Technicals trend-wise look okay, but on the USD pairs, I want to see some weakness before I start buying. And the BTC pair looks like it's ready to display some weakness finally. And the ETH pair is likely to follow along more so than the BTC pair, especially if ETH fees stay high or remain high. And something else to consider with all this DeFi stuff. How is EIP 1559 going to affect things? How is the proof of stake transition for ETH going to affect things over time? So let me know do you like Sushi better than Uni? Do you like Uni better than Sushi? Let me know in the comments below, and happy trading.